Hey AWS family, this is Renee and Jay with this month's economic update. We are recording at our new Winston-Salem office. We are really excited to be here and can't wait for our clients here in Winston-Salem to come check out our new space.
So like always, we're going to run through some bullet points of some economic information. We're going to start with the new Fed chair nominee, who is Kevin Warsh. He has a reputation as being fairly hawkish, but he got the job so that he would be encouraged to lower interest rates in the near future, even though a lot of economists don't think that's the most prudent thing to do right now. Most economists and experts that we follow are expecting about 2 rate cuts over the next couple of years. Foreigners, we talked about a few months ago, had temporarily stopped buying U.S. Treasuries, really just in protest over tariffs. But since then, they have been buying them. U.S. Treasuries are still seen as a good deal. In fact, foreigners bought almost $115 trillion of U.S. debt just in November alone. The U.S. economy is still strong. Both spending and productivity are up right now. The people in our economy who are struggling the most tend to be the lower income sector. That does not, however, affect the stock market much at all. We expect the volatility to continue. Volatility to a professional active manager is actually a friend. It provides a lot of opportunities. Fortunately, that's the philosophy of our management team, is active management. Usually the entire market moves up and down together, but this year we're not seeing that. Again, that means active investment management is even more important, as there's going to be a lot of winners and losers during this year in the market.
Gold and silver have really been on an increase over the past year or two, really starting to see it take off in the past 6 months. Last week, right around Friday, we saw a big dive in gold and silver, also with cryptocurrency. Luckily, we had sold off a lot of our gold and silver ETFs along with cryptocurrency. So a lot of our portfolios didn't experience near as big of a hit as those people who were holding that gold and silver. We are currently holding more cash and commodities just for the outlook of the market. We're still being pretty neutral. We have increased our exposure to Latin America and Brazil. One asset class that we are avoiding currently right now is real estate. So that's all we have for this month's update. Look forward to our St. Patrick's Day basket giveaway, and then we have our Winston-Salem classes taking place in the next few weeks or so. So feel free to reach out to us if you have any questions, and let us know if you need anything else. Thanks.